Okay, now we're recording. Okay, let's start over. Welcome. Thank you all for being here. Yes, it's tax time, and that means that people across the country are poring over paperwork and filling in forms and hoping to file by the deadline on April 15th. And for many, it's routine, but for a lot of us, it can be a significant source of stress. I know I've talked to my mom over the last week, and she every day, "What are you doing today?" "Oh, I'm getting papers together to take to the accountant." I don't know. I'm picturing just piles and piles of paper. It's taking her a week now every day. So it definitely is it's a big thing to a lot of people, but I don't think it has to be as stressful. And I think for a lot of you all doing it for the first time, it's more the unknown too. So that's why I'm super excited to have an expert here with us today. And I'd like to introduce Denise Ortiz. She's a certified public accountant, a CPA, and licensed wealth coach. And she's the principal of Accounting Consultants, which is a certified public accounting firm headquartered right here in Columbus, Ohio. And she established her CPA firm in 2004 and works with national and international clients, individuals, and varying size organizations. And she is a graduate of The Ohio State University and holds accounting certifications and memberships in several financial and accounting organizations. So I'm going to stop talking and let her go, and we'll definitely have lots of time for questions, and I'll monitor the chat. So if you want to go ahead and put questions in, I'm happy to take care of that for her. So welcome, Denise.
Well, good afternoon to all of you. And just like Samantha said, I've been in this business for quite a while. To tell you a little bit about me, I was in college one day, just like you, and I wanted to know, what am I going to do with my life? And I did a business plan, and the business plan was to open up your own CPA firm. But at that point in time, I didn't think it would come to pass that I actually did that. It just sort of worked out that way. My experience in working has been with Nationwide Insurance as an auditor. I was with a private firm for a while as an auditor and accountant, and then I was with the state of Ohio for about 15 years in various different capacities. I worked for the Department of Development, I worked for the Bureau of Workers' Comp, and then my final position was with Job and Family Services, which was Human Services when I joined it, and they merged with Employment Services and became Job and Family Services as an agency. And I started out of college and studied for my CPA, but you come across life changes when you're younger, and I got married and I had kids. And so all of that got put on the back burner. It just sort of all the studying and things. But about 10 years later, I realized I need to get my CPA. And so I don't know if you're familiar with the CPA exam, but it's an exam that you, at that point in time, you take parts and you pass it, but you had a window of time to complete it. Well, by stopping, I totally, obliterated that window, and I had to start all over from scratch. And so I tell people all the time, if it's something you really want and you feel you need, it's okay to kind of back up and do it over. It's very important that in life you accomplish the goals that you want. So my kids were younger then, and I was studying and working and going to school, but I got through it. And so about 2003, I left the state of Ohio to work full-time on my own. And I pretty much have always had a business for about 38 years. My son is 39, so that's kind of when I started doing this, but I also had to make a living, so I was working full-time. So when I left and went on my own. I obtained my securities license. I did a lot of different things, insurance license, because when you're advising people on their finances, you kind of have to have a well-rounded background. Today, I primarily work with accounting and taxes. I have a lot of clients all over the country. I have a couple of clients out of the country. I have a client in the Turks and Caicos Island, and I've been there more times than I can count, to work, not the vacation, but it's a fun place to go to. And so today I wanted to kind of just give you guys some basics, because your taxes have to be pretty simple right now, I would hope, unless you got a business, because you can have a business. There are people who have businesses, lawn care business, things like this, as they're growing up and they work these things. But at this point in time, you guys, you're working for folks, and that's probably pretty much it. From a standpoint of your taxes, I want to cover today the basic of taxes and then the tuition credits, because there are a lot of credits and deductions that you're eligible for, and or your parents are eligible for. It just depends on what scenario and situation you are in terms of, do your parents, are you their dependents, or are you not their dependent and on your own? So first of all, I wanted to talk about the question, do I need to file a tax return? Yes and no. It depends on the amount of money you're making. If you tend to work and have taxes withheld from your wages, you definitely need to file. The way the tax scenario is set up right now, you pretty much will receive back the bulk of the federal taxes that they've taken out of your wages. So do you need to file? The question depends on who you are as a person and how much you've earned. And there's some handouts you're going to eventually get, but like if you're single and you pretty much making, let's see, when you're single and you have for 2020 and you're making under $9,875, then you really don't need to file a tax unless they've withheld taxes from you. And then you're filing just to get your money back. Now, my experience has been with college students that your parents claim you, and your parents claim you so they can get the deduction and the tuition credits. So you want to have a conversation with your parents if you're going to file, because you can still file. You just don't want to claim yourself as an exemption. You're just pretty much filing to get back the monies that were withheld by your employer. So my experience is that the parents benefit more from the credits, the tuition credits. And so that's just something you have to go over with your parents and their tax preparer or their CPA. Branching out on your own can cause problems if you don't have that conversation. And I every year I hit this issue where the dependent child who's in college has already filed, because you can file on your own. And part of what you're getting from me is a list from the IRS of free tax preparation software, because you can do this yourself. Your taxes are such that it's not very complex at this age. So once you do file and claim your exemption, You have the ability to file electronically. You file electronically, you have the ability to direct deposit your refund, and that's the quickest way. If you file a paper return with the IRS, you're looking at 6 to 8 weeks before you hear from them, because it is such an overwhelming process for them. And I don't know if you all were aware, last year when the pandemic hit, the IRS shut down. So they're like behind, really behind. I've had several cases with clients where it wasn't tax preparation, it was something else like amending a return from a prior year. And we were waiting and waiting and waiting. And the IRS said, could you please just refile it again, because we can't find it. They know they had it, but they just can't find it. So if you file your return, file electronically and have a direct deposit in your bank account. It's usually less than 3 weeks. That's the most efficient way to do it. And if any of you are married, you and your spouse can file. You have 2 ways to file when you're married. You can file married, filing joint, or you can file married, filing separate. The other ways that you can file are not available to you. So there's single and there's head of household. You cannot file single or head of household if you're married. The only way you could file head of household or single and be married is that you've been separated more than 6 months from your spouse. So for most of you, it'll probably be filing single. That'll be the way you file it. And any income that you make that is more than $600, you should be reporting. So if you're babysitting, on weekends and over the year, you've made more than $600, you should be reporting it, even if the person who paid you is not giving you what's called a 1099 NEC. You guys may have heard of this before. It used to be called the 1099 miscellaneous. This year they changed it to the 1099 NEC. And the reason was people who are self-employed, they wanted to pull them out and put them on a separate form, because the 1099 miscellaneous is rental income, medical payments from medical providers, attorney fees. It's just a whole host of folks that were being paid on a 1099, which is like a W-2, but it's called a 1099. And I guess the IRS figured we can't track this good. So we're going to come up with a 1099 NEC form. If you have someone work for you and you pay them more than $600, you should be issuing them a 1099 NEC. And then any other types of income, these are some of the other types of income that you should report. Social Security, rural retirement, unemployment compensation, and you will get a statement from the state of Ohio or whatever state you're in for the unemployment that you were paid during the year. That seems to be a lot of folks getting that this year. If you have any other type of distributions from, I want to say retirement accounts, but you guys aren't retired yet. But if you have any kind of investment interest, dividends, things of that nature, that is also taxable to you. If you have gambling winnings, you can claim that. One story I have is I filed people who were gamblers. All of their income for the year was from playing in the casino somewhere. So we legitimately were able to file them as gamblers. And that's a little different than the normal people, because if you go to the casino and you win money, you're just adding it in with your other income. In their case, it was handled a little bit differently. Let's see. If you get tips, that like you work and you receive tips, that is also taxable income. If you have rental property, the rental is income, the income that they pay you. And on rental property, you also have deductions. So all the expenses that are associated with the rental are deductible. Now, this probably doesn't really apply to you guys a lot, but I bet it applies to your parents. And like you were saying, Samantha, your mother keeps taking this list of papers and different things. There's a thing called itemized deductions, state and local taxes, mortgage interest, charitable contributions. Those type of things are itemized deductions that when you said your mom keeps saying she's taking things back and forth, I said, yeah, she's probably trying to make sure she gets all her deductions in. So that doesn't apply probably too much to you guys, but at some point in time down the road, when you buy a house, it will apply to you as a taxpayer. Now, the other thing that you guys are probably looking at is education credits. And there are several different types of education credits that are available. There's American Opportunity Credit, and there's also the Lifetime Learning Credit. And these credits are available because they're a direct deduction from your taxes. So say if at the end of the year you owe $4,000 in taxes, well, you can get a credit that's $2,000 that'll wipe out half of the taxes. One of the things you have to have is qualifying expenses. So qualifying tuition, books, education related expenses that you would have, supplies, equipment, all of those will be claimed. And your school should send you a statement. It's called the 1098T. And most schools now have it online. And you take that statement and those tuition information to your tax preparer, or if you're doing it, you can do it. But if your parents are claiming you, let them claim you. What I've advised my clients is if for their children, bring me your children's stuff too. Bring me their W-2s, because then that way I know there's no oops and we have to go back and amend the kids' return because they claimed things that really were more beneficial to the parents. On the tuition credits and things, it also includes like student activity fees, but there are some limitations to who can claim it. So if your income is more than 69,000, well, 59, between 59 and 69, the amount of credit gets reduced rather. So if you're single and your income is more than 59,000, you may not be able to claim all of the, you may not be eligible for all of the tuition credits. You cannot take tuition deductions or credits if you're married, filing separate. And there's, I don't know the reason, but if you're married, filing separate, you cannot take that. So this is pretty lucrative for most folks. Your parents were claiming you and they were getting a child tax credit. And when you went to college, that stopped that child tax credit. And now they're able to take advantage of the tuition credits. So it's very helpful for them. The child tax credit you receive until your age 17. So your parents were receiving that. But once you pass 17 and you start going to college, then the tuition credit kicks in. And it starts at $2,500, but depending on the credit, it can go up to $4,000. It just depends on your income, what your income is. And then there are a couple of other things that are related to tuition and fees, and that is something called the 529 Educational Savings Plan, which is a plan that you would be, like say when you start working, you'll start putting away money for education if you have children, but you also can put that money away for yourself. So if you have a child and you plan on going back to school at some point in time, you can do a 529 plan for yourself and put the money away. And the good thing about the 529 plan is, and you know, all I'm going to say is check with your financial advisor. But the good thing about a 529 plan is once you set it up, say I set it up for kid A and kid A decides not to go to college, you can have the plan name changed to child B or yourself or whoever's going to college in your household. So a lot of times parents will have the educational savings for themselves, and then they decide, well, I'm not going to go to school. So you just change, then you have the advisor change the name on the plan, and you can use it for another dependent in your household. There are a couple of other programs, the Cordell Education Savings Account. It's not used as often, but it is used to pay tuition and fees. And so parents do sometimes save in that. You can also pay tuition for kindergarten through 12th grade with your educational savings credit now. So it used to be just college, but now you can use it for kindergarten through 12th grade. Okay. And then when the money is taken out of the education savings account, it has to have the name of the person that is on. Sometimes, let me explain the scenario. Sometimes parents say, okay, I got to pay tuition, and they call the advisor and say, send me a check. But in error, the check is made out to them. Well, they're not the student. It should have been made out in the student's name or the university name where they're going. And so sometimes that causes a problem because that could be deemed taxable if it's in the wrong person's name when it's issued. And I don't understand how that happens, but it does. I've seen it happen several times. And then let's see, student loans. Let's talk about student loans. So if you have student loans, you are able to deduct when you start paying the interest on your student loans, when you start paying them. So usually that's not till down the road after you have graduated, but you can take the student loan interest deductions, and it's another benefit for you as a taxpayer that helps. Okay. And depending on your scenario, sometimes your scholarships and grants can be claimed as taxable income. And when that happens, it's going to be more to your benefit from a tax standpoint. It's not often, but it does happen. I've seen it happen where it was better to claim that scholarship and grant as income because the deductions that came along with it made it more beneficial. Now, for you guys, if you are filing your return, do not pay anyone. I'm just going to tell you right now. You're smart enough to be able to do this yourself. You go to irs.gov and they have a list of different tax preparation companies that they recommend, and they're free. And if you all you have is a W-2 and a 1098-T, it's a simple thing. You know, you just read the directions and follow the instructions. People make taxes out to be very complex and complicated, but they really are not that complicated. It's just the thought of doing it. The people are apprehensive, you know, and one good thing I like is when I have people, I don't do just like your basic tax. They come with 4 or 5 years and you're like, where have you been? But the reward to me is when people leave my office and say, oh my God, I feel so much better, because they've kind of dumped their stress on me. And it's a good thing, because it's easier to pay somebody to do something like that when you have 3 or 4 years. But if you have prior years, because you guys might have worked jobs while you were in high school and stuff, you can go back and amend up to 3 years. So if you had a job and you know they were taking out taxes from you and you never filed that return, you have up to 3 years to file that return and get that money back. And it may be a couple $100, but if you got 3 years worth of a couple of $100, you know, it kind of adds up. And let me see. Just want to make sure I cover all the things that is kind of helpful to you guys. I would say that if you're in college and you can read and write, you can do your own tax return. It should not be a problem for you. However, there are always people like me that you can call and ask questions. And I have a lot of times people do call me and just ask questions. And it's if you catch me and I'm free and not real busy, you know, usually I can answer the question for you and help you out. So I want to use the rest of our time to kind of go over any questions or issues you may have. Is there anything I can help you? Okay,
Looks like,
Jonathan.
yes. Could you tell me about the American Opportunity Tax Credit?
Okay, so the American Opportunity Tax Credit. Let me give you the, okay. It's for 4 years. It's $2,500 per year that they allow. And it's based on your income. So if you don't have sufficient income to take advantage of the credit, you won't be able to claim it. And that's why sometimes it's better for your parents to claim it. Was there specifically something you wanted about that, Jonathan?
You can go ahead and unmute Jonathan if that helps.
I heard it's a good way to save money for college. Well, it's a credit. So you're going to get it, like, you're going to spend the money and then get the money back, the credit. So it's not like you can save. Now, the educational savings plan is the way to save for college, but you guys are kind of past that because you're in college now. So you're just trying to get through and get the credits or the deductions that you can receive. Okay.
Some other questions? Don't be shy now.
Hi, I have a question.
Mhm.
Well, I have a few, but you were talking about like people owing money.
Mhm.
Because I know like later down, like not college students, but like adults, they'll file their taxes and then they'll be like, oh, you owe money other than you're getting money. How is that determined? Like what are some mistakes? I'm pretty sure they did some mistakes while filing taxes, but what are some mistakes that happen for them to owe money? Or
Mhm.
what happens
Mhm.
and why do they owe money?
There are various different reasons, but I can tell you the way to fix that. A lot of people are not having enough withheld from their wages. So when you fill out W-4, when you're working, you have to make sure that they're taking enough out. And so when people do not have enough taxes withheld, like if you're single and it's just you should be at a single and one rate. But you'll have people who are like a single and eight. So there's no taxes coming out. And that's the main reason. That's one of the main reasons. Now, there are other reasons. The other one is a big one. I see people taking money out of retirement plans. And if you put money into a retirement plan, you're working for a company, it's good. It's a good thing because a lot of companies will match. So they will match maybe 3 to 4% of what you're having deducted. But you have people who leave that job and they take that money out. And that money, when you initially deposited, was pre-tax, so it was not taxed at all. So if you leave your job and you're making 50,000 and you leave your job and you have 30,000 in earnings, retirement earnings, that means your income that year is 80,000. And if that 30,000 did not have any withholdings, then that's why they're owing. Now, if you do owe the IRS, they have installment agreements, they have a number of plans. They actually have, I'm trying to think of what the name of it is, but I have two clients like this where they're uncollectible. They just can't collect from them. They're not making any money, or they're on Social Security. So the IRS puts them in an uncollectible status. The money still sits there and penalties and interest add up, but they may never be able to pay it. So I always suggest to people, if you owe, make some kind of arrangements to pay, even if it's $50 a month. Now, the people that usually owe can also do what's called an offer and compromise. And what offer and compromise does is allow you, the IRS looks at your current income. They look at, you owe us 30,000. You're never going to pay us 30,000, but we will settle it for a lesser amount. And so offer and compromise is another option, but people that owe have a tendency to avoid it, and it adds up, and then they start garnishing your wages, levying on your bank accounts, things like that. So I always tell them, make some kind of arrangements and pay $50, but if you can pay more, pay more. So hopefully that helps you. Did you have another question?
Yes, but I think Triana raised her hand and Hannah. So I'll wait. I can wait till the end.
You can go
Okay.
first, Shaylee.
Okay.
Hi.
Okay. The other question is like you said that when my screen. Okay, my screen's fine. When looking at you said that we could file online. What general like salary or like amount of income do you think a person should have before they start going to accountant? And like, if so, when you're looking for an accountant or a tax prepper, what
Mhm.
what things to look for and stuff? Where can all like tax preppers be trusted or whatever?
Yeah, yeah. So right now, anybody doing more than 10 tax returns is required to register with the IRS. But you have a lot of people out there who are doing tax returns and they have no business touching the returns. So what I would suggest is you ask your family, you ask your friends, who's your preparer. You can also go to the irs.gov site, and they also list preparers in your area. And so you can pick someone from there. And you have to find somebody who you're comfortable with. I have clients that have been with me 30 years, and I have some clients that have been with me 2 years. It just depends. But you have to be comfortable with the person, and the salary and the age. A lot of people do their own taxes. If you just have a W-2 and that's it. But if you're constantly growing in your employment, and things like retirement plans, we tend to advise you on taking advantage of these plans, because down the road, you'd be surprised how fast time flies. And if you've been putting away $4,000 or $5,000 a year in a retirement plan, after 20 years, it could be a substantial amount of money. So you want to find someone who has more than I'm just here during the tax season, because that's where the problem starts. And you want to look for someone who's professional. Like I was saying, you can go to IRS and check on them. Interview the person and make sure that I have people that interview me, they're like, well, you were recommended, but, and I appreciate that, because that tells me they've done their homework. They're not just looking for anybody to fill out the paperwork. You need more advice. I work with insurance agents, real estate brokers, financial advisors. So I can send my clients to people that will help them with whatever that financial need is. And that's what you want to try to find. You don't want to just go to somebody that they set up shop at their kitchen table during tax season, and then you got a problem in October and you can't find them anywhere, So do your homework, do some research, and that's the best way to look for someone.
Hannah, did you want to ask a question? Oh, I think you're muted, Hannah.
And can you hear me now?
Hi, yes, we can.
Okay, great. Sorry about that.
No
So,
problem.
my question actually piggybacks on the last one about owing debt. And so I was curious to know, I wanted to know basically the appeal option that you mentioned, is that the same as filing for bankruptcy? And if someone files for bankruptcy or does the appeal process and say something happens, would this debt be absolved with, say, their passing, or does it go on to like next of kin?
Okay, that's a good question. So when you file bankruptcy, you cannot file bankruptcy for your taxes. So they're just part of the bankruptcy and you're still paying them. However, if you want to take the steps to eliminate the tax debt, you have to file an offer in compromise with the IRS. And that's how you can decrease it or minimize it. You won't eliminate it. You'll have to pay them something, but they give you 2 years to pay. So it might be you owe 30,000 and they settle for 3, and you got 2 years to pay it. And it's not like they just come up with a number, but they look at your assets. They look at what you have. They look at the value of your car. Is it worth anything? They use these things to determine how much can this person pay. And, that's one of the best ways right now for people to, minimize the tax liabilities. But the bankruptcy is a total different thing from the tax offer in compromise.
Trayon, did you have a question?
She put
Yeah.
her comments.
So my question was like, what is the difference between a tax credit and a tax deduction?
Okay, so a tax deduction um, basically is you have income, and then deductions are a reduction of the income. So trying to think of, so charitable contributions, you have income, and then your charitable contributions can reduce that income. Tax credit is an actual reduction of the tax. So if the tax ends up on your income being $5,000, then you got child tax credit, earned income credit, tuition credits. All of those actually will reduce the taxes as a credit. Now, something I didn't say to you guys, but I'm just gonna throw it out there because it may apply. If any of you are single and over 25, there's a credit that you're eligible for, and that is the earned income credit. Usually people think of earned income credit as only applying to parents with children. But if you are single and you earn under $15,000, you're over 25 or over, you are able to take advantage of that earned income credit. So a credit directly reduces the tax, whereas the deduction only reduces the income.
That's a good question. So I have a question. When you are using the free software, does it walk you through these like options for tax?
Yeah, they
deduction?
usually do. They ask you questions to kind of prompt you to what you need, and then you put the information on the lines. But it's sort of like you go in, you put the W-2 information in, it just sends it to where it belongs. So if that's all you have, that's it. But it does ask you questions like an interview so that you put things in the right place. The problem is I've seen people do their own taxes and then they're like, well, I did it this one way and I got more money back. So that's what I accepted. And I said, well, that was the wrong answer, so. But you really, it's an interview process, and there's several of them out there. And, I've used some of those softwares and things, and they're all pretty reliable.
I posted in the chat the link, so hopefully everybody saw that, to the documents that Denise has provided with, and one of those was the recommended resources for filing. Does anybody, these are awesome questions. Do you have some more questions?
I have two more. You were talking about one about the student loan pay, like I think it was, you said a deductible,
The
but
interest. Mhm.
yeah. So is it only for like if you're paying an interest, or what happens if you start, or is it like, can it be added to the principal? Say if you like started paying your student loans off while in college and then you graduate, but you still got student loans, but it's mainly the principal left. Can you still count that, or no? It's only for student loan interest.
It's only for the interest. Yeah, it's only for the interest.
Okay. And then the other one, I stepped out, but it was like you were talking about a house, when you're getting a house. Can you talk more about that again?
Like buying a house?
Yeah.
Well, when you own a home, you're able to deduct the taxes, the real estate taxes, the mortgage interest, if you have charitable contributions, cash and non-cash, you're able to deduct that. So it recently, with the changes in the tax laws, it's more than likely that people are not itemizing and claiming those things because the amount that you're allowed is greater than what most people would attain. Like right now it's 12,400. So your mortgage interest, your real estate taxes, your charitable contributions, if they're under 12,400, you're going to just take the standard deduction rather than itemizing.
And what happened if you're on a shared mortgage? Like say if you and your friend go half on a house, like put both of your names on a mortgage, can only one person?
Yeah, you can split it. Yeah, you can split it. Yeah, definitely. You just when you have your taxes done, you explain that to the person that is preparing it, and they'll see both names on the house, the mortgage statement, and you'll split it half and half.
Well, these are great. Any more questions?
I don't know how to necessarily word this, but like, does being like a college, I'm sorry for the background noise, but does being a college dependent for like your 4 years, does that kind of have like an impact on let's say for instance, like when you get a job after you graduate, how those taxes will like occur? So like would it be more likely for a college student to be paying the state or their federal government? Or is there no correlation?
Well, it probably leans more to no correlation because a lot depends on how much money you make. So after you graduate, I'm sure your income is going to be more, and so your whole tax scenario will change. But when you're in college, and the 4 years you're in college, your taxes are probably lower or you have no tax. And as I was saying earlier, you want to file a return. If you got a parent that claims you, you can still file a return, but you just do not want to claim yourself. You're just filing to get back the taxes that were withheld by your employer. So most students, when they file, they're getting their money back. They're getting back what was withheld. But you want to check with your parents, because if your parents are claiming you because of the tuition credits that are available for them, you don't want to put a problem in their tax scenario, Okay.
Good. No more questions? These are great questions, you guys.
Oh, Jonathan. Well, it depends on where you're working at and what you're doing. A lot of employers provide tax preparation as part of their HR package. I've seen that before. It would not hurt to do a consultation. Most tax folks like me and most financial advisors do consultation, no cost consultations. And so you're able to do that. But once you leave school, the tuition, the student loans become, real. So that's going to be the major change, Jonathan. If you have student loans, that will definitely be a change. You're going to have to pay them back. And there are a whole host of programs with student loans and deferment of paying student loans if you're not working. So, you'd have to talk with your student loan provider and see what they have available. Okay.
Oh, any more questions before we wrap up?
And my question is, do they have my contact information? Is it on it?
Oh, no, they do not. So I will make sure, or we could put it, would you mind putting it in the chat, or I'm happy to do it? I also see one more question. Thoughts on a Roth IRA and MPI system?
I'm not familiar with the MPI system. I don't know exactly what that is, but a Roth IRA, there are two types of IRAs. There's a traditional, and the traditional IRA will reduce your taxable income, and it will be taxed at a later date when you pull it out. And the Roth IRA does not give you any tax benefit now, but if you hold a Roth for 5 years, when you pull it out as retirement income, it is tax-free. So you guys being young, if you're gonna do, you wanna put away money for retirement, a couple thousand a year into a Roth, you're not gonna get a tax benefit, but you're gonna get a life benefit when you start pulling it out because it's earned and it's in a position where you don't have to pay taxes on it.
I posted your contact information.
Oh, okay.
In the
Yeah.
chat.
Yeah, and if you have questions, you're trying to do your own taxes, you just give me a call. I'll try to help you through it.
Well, this has been wonderful. I always learn stuff too. So I think,
Now you can go.
and you're right, taxes are like, they change over the course of your life and
Oh my God, they change every year. And, this year, the earliest you can file your taxes is February 12th. Usually it's January 15th. But because of all the changes and new administration and things, this is the latest it's ever been delayed to February 12th. So for people like me, that's not good because we have a smaller window. I'm just hoping maybe they do something like last year where they extended the tax season to July. Because now our window is much smaller. It's not that we're not doing taxes now. I am doing taxes, but I can't file them. They're just sitting there till the 12th, so. But I pretty much, in my business, I work with businesses. I work with small business owners. I work with people, I don't have people that just come with W-2s. I work with people that either have a small business and a W-2, or they have real estate that they own, rental properties and things like that. So that's why I say you guys should be able to be okay doing your own taxes. And there are a lot of good sites out there on the irs.gov website.
well, great. Well, I think you answered them all.
Okay, great. Well, good luck. I understand it's the first week of school, and I'm sure it's a lot of unknowns going on in your life. But you'll make it. 4 years go by fast.
Thank you so much for taking the time and sharing your wealth of knowledge with us.
I appreciate it. And if you need me again, just give me a call.
All right. Thank you. Thank you. And
Okay.
have a great weekend. Everybody have a great weekend.
Good luck.
Thank you.
Bye.
Thank you.
you.